traders at Access Bank say investors are looking to take profits from their OMO auction winnings. The CBN offered a total of 600 billion naira across 355-day and 362-day tenors, attracting a total subscription of 1.9 trillion naira. Meanwhile, investors are maintaining a cautious approach ahead of the first MPC meeting of the year. Nonso Ifejiofor, the Treasury Team Member at Access Bank, joins me now for more on the market. Thank you so much for your time on the show today, Nonso. And let's get a take on what's been playing out this week. We've seen that 600 billion naira OMO auction play out on Thursday. I'd like to get your takes on how investors are positioning.
Okay, thank you for having me. First, I will start with the liquidity position, which sets the tune most times for what happens in the market. For this week, we've seen the market in the red region. The market has been negative in the repo. As at yesterday, the market 551 billion negative. For today, it's about 1.73 trillion negative as a result of the OMO auction that held yesterday. As at Wednesday, what we had seen was the market was trading on a calm note. And midway through the trading session, we saw the Apex Bank come in to notify market participants of an OMO auction, 300 billion on the 362-day maturity and 300 billion on the 355-day maturity. At that auction, what we had seen was a subscription base of 1.9 trillion. The Apex Bank sold 1.3 trillion across the two maturities, and the rates closed at 21.45% and 21.32% respectively. That is some 100 basis points shy from where it has closed at the prior auction. Post-auction, what we are seeing is that market participants are positioning to take profits from their auction winnings. We have seen those papers trade at around the 20.4 and the 20.6 handle. For the other activities, we see market participants are trading cautiously, as you rightly mentioned, positioning themselves ahead of the MPC meeting for the 19th and 20th, which is next week. Our expectation for the meeting will be based on what we see from the posting or the results of the Nigerian Bureau of Statistics. That's the inflation numbers and the GDP numbers. We have cause to believe that the inflation numbers would be one of the driving forces as to whether the MPC will maintain the MPR rate at 27.5%, and also the asymmetric corridor at -100 and +500, where it currently is now.
All right, now, so quite a lot to look forward to. But I'd like to bring up some other things from the news flow here. We're seeing the lawmakers have passed the 54.9 trillion naira budget, and I'd like you to speak to the implications of that for the market, especially when you look at the size of the deficit here and how the government is strategizing to come to the market.
Yes, so earlier, late last year, if you recall, the budget was at 49.7 trillion. That was what the president had presented to the National Assembly, and there was an increase to 54 trillion. And there are indications that this is based off on increased revenues from customs, which is about 1.2 trillion, FIRS, 1.4 trillion, and other agencies 1.8 trillion. What we had seen from the budget last year was that there is a 13 trillion deficit, and what market participants see from this is that there will still be an increased appetite for borrowing. We should still see the government coming to the market, floating the NTB securities to get funds to ramp up this budget and the ability to meet their obligation to the nation. So market participants are sort of bullish on that because the thinking is that looking at the size of the deficit, that the borrowings we've seen from last year will continue for this year. And I believe participants are already positioned in having a long-term view to benefit from whatever it is that comes from the backdrop of the budget. Thank you.
All right, definitely quite a lot to look forward to, but thank you so much for your time on the show today. Nonso Ifejiofor, the Treasury Team Member at Access Bank, talking about activities in the fixed income and FX space here in Nigeria.